This is the FM Gold channel of All India Radio. In the program Money Talk, we bring you a dialogue on SEBI probe into suspected foul play in stock market crash. The participants are Dr. Yamini Agarwal, Indian Institute of Finance, and Sanjay Jha, South Asia editor, Global News, London.
Yamini, we have seen a lot of battering in the Indian stock market in the last couple of weeks. For the last 2-3 days, we have seen a semblance of recovery. Do you think this is here to stay because the Indian markets have corrected quite a bit, or you believe this is just a dead cat bones and there is a more downside ahead?
Well, I believe when we look at the market positions for the last 3 days, though there is a consecutive positive sign, it's a mere secondary correction which is there in the market. There's not much of a change in the primary trend. Though it may appear like the market has rebounced, but these are small minor corrections which are taking place in the market. If we look at the Sensex, it's closing at about 473 points, 100 points on one day or some points like that. But the fall has been for a very, very consecutive period. So these small bounds for 3 days cannot really change the trend. We will have to look for them for a longer period of time.
Also, these resurgence, the bouncing back in the market happened after regulator SEBI has announced an investigation into the decline in the market. And SEBI is going to start probe into that, suddenly why market has started tumbling down. Do you think it's because the investors have got a new confidence after SEBI has started the probe?
See, when we look at the resurgence of the last 3 days, there are different reasons to it. One, the most important reason is that the FII inflows have come back. The FIIs usually go out during a certain period when their closing is there and they're booking profits. When the FIIs come in, we also see the rupee appreciating. Now, rupee also appreciating, then if you look at the crude oil prices, these crude oil prices have come down because there was an Egypt crisis which was there. The crude oil prices had gone up, the Sensex had gone down then. The Egypt crisis has resolved. So automatically crude oil prices have also softened. Besides that, the government has also seemed to be serious in terms of taking care of the corruption matters, like the JPC probe is being talked about. Then also if you look at the ministers, they're talking about a positive note of the economy. We look at the US markets or others, we see that there is a positive note coming from there also. In terms of employment also, we'll see that the MNCs are coming up with new employment issues. There is liquidity crunch in the market, but the banks are still able to finance their needs. If you look at deposit rates, they're high. People are still satisfied. So overall, the Sensex is showing a positive turn primarily because there are these factors which are affecting them. If you look at the downturn, there have been different reasons for it, for which the SEBI is bringing about the probe and doing things. Let's say when we talk about the SEBI probe, it's saying that there are about 25 entities which have created a beer cartel, which is about 3 beer cartels, and which involves these individuals, brokerage houses, FIIs and mutual funds, and which are actually leading the Sensex to go down, which is approximately about 100 companies' share prices. But I don't believe that an entire beer cartel can be a proper reason. There are different reasons to it. Besides that, there is a lot of hue and cry that there is a loss in the Sensex. But this is a mere notional loss. We have not touched the support levels as yet. If you look at the Sensex overall in figures, we have touched 16,000 points last year in March. And we were at about 21,000 points in November or so. And now if you look at the trading positions, it is 18,000 points. So we have a position of going up to 21,000. We also have a position of going down to 16,000. So these are the positions we can actually move. But each time we grow, we don't really discuss it. But each time we lose, we take a huge hue and cry. When the markets actually went from, let's say, 17,000 points from January 2010 or February 16,000 points to, let's say, November 21,000 points, nobody really wanted to discuss that 4,000, 5,000 that we've gained. But suddenly this 3,000 point fall, everybody wants to discuss. Now, because it's a Sensex, automatically there are positions which will reach peak. There would be also positions when there will be fallouts. Now, people who will make gains will automatically pull up the Sensex. People who would actually tend to buy or sell at a time, then they will make the Sensex lose.
Yeah, that's true. Nobody talks about when market starts going up. People start crying horse when market is tumbling down. Today, the Indian Securities and Exchange Board of India has announced that it started implementing a data warehouse platform to enhance investigation and surveillance capabilities. Data warehousing allows an organization to electronically store a large amount of information. So, do you think this is SEBI's effort for a long-term market reforms and it will help the investors at large?
See, SEBI exists for the investor, so automatically when it brings about the centralized system of data warehousing where it can identify which stocks are being traded and where the insider trading or any kind of a, let's say, manipulation is taking place, it will automatically protect the investors, which is a very good thing. But to identify every fall with only the manipulators or with these specific people who can manipulate the market is not correct. If you look at the Sensex fallout, there are different reasons for it. Let's say we can talk about it in terms of the economic reason, we can talk about the political reasons, we can talk about the technical reasons, and we can also talk about in terms of the non-technical reasons. For example, let's say we talk about the economic reasons. We find that when the Sensex fell down, there was a complete pullout from the FIIs. The crude oil prices were also on a very high. Inflation has been continuously on a high, so it doesn't show a positive outlet. Then the government has been bringing about certain sanctions with respect to the FDIs or on the tax haven countries with respect to which companies can invest in these markets, which companies cannot invest in these markets. Then if you look at the global markets, they have also not been doing very well. So automatically they also affect our Sensex. So it's not only these manipulators who are affecting. The global recovery, which we talk about, the global financial crisis, has also been low. So the banking system is also affected by that. Again, if you look at, let's say, leaving apart these last 3 days, previous to that, many banks have been going in for profit booking before the SEBI had come out with the probe idea. So again, that impacted economically the Sensex. If you look at the political reasons, we understand that there have been a lot of unfolding scams. You know, the much talked about the 2G scam, the IPL scam, the Adarsh housing scheme scam, the LIC housing scheme scam. So all this automatically creates a lot of uncertainty in the market. Then politically, many states are also having difficulties. Let's say Karnataka is having a political uncertainty. Then international political uncertainty exists in the Arab region. Though we look at the Egypt, there has been some kind of a solace around there. But then other Arab regions are facing problems, which will create more problems in the crude oil later. So again, the Sensex will tend to react to that. Then there are technical reasons. Let's say if we look at the trends, for example, in 2009 we were close to 9,000 points. People do not remember that. And in March we were around 8,000 points. January 2010 we touched about 17,000 points. So it's a huge gain. February then again we came down to 16,000 points. March we were again at about close to 16,000 points only. Now again this January, if you look at, we've had a high and then we've had a low, which is a loss. So we see a primary trend that during this period of January, February and March, there is a usual downturn. So probably because of the FIIs booking profit or the mutual funds booking profit, the banks booking profit and other activities happening. One also needs to remember that the budget comes during February. So the budget expectations also bring about a lot of changes in the Sensex, and the tumbling in the Sensex is also a part of the expectations that people have from different stocks. The other technical reasons I also believe is the bank is having problems with the NPAs. If you read through the bank's balance sheet, you'll see there is a rising NPA positions, and for which the provisioning has been raised by the RBI. Automatically now the banks cannot stand invested at the same levels as they used to stand. Again, the promoters have been at a major risk who have pledged their securities in the bank. So these are some of the reasons which are creating problems. If we talk about, let's say, besides these economic reasons, political reasons or the technical reasons, there are also non-technical reasons which we really cannot identify, or which we call an econometrics as the error term. Something like which we cannot identify for what reason is it happening. Let's say irrational exuberance. People, as a common retail people, they will say, okay, it's at the lowest point, please go and buy. It is the highest point, please sell. So that kind of a situation arises. So that is not really justified as to the stock was not good or there was a Sensex position, but people believe, okay, it's the highest point, you should sell. It is the lowest point, you should buy. So that kind of an irrational exuberance exists. Again, these are some specific points we need to take into consideration before we consider what have been the notional losses and the notional gains in the Sensex.
You talked about inflation. Actually there's a good news on the inflation front. Inflation has declined marginally to 8.23% in January from 8.43% in the previous month, as prices of certain commodities like wheat, pulse and sugar eased. Onion of course has come down as well, as we all know. Although essential items like some of the essential items have continued to remain dear, except the onion. And government has been hoping for the easing of inflation. So do you think this has also given a new boost and hope to the stock market?
True, Sanjay. As a matter of fact, when we look at the reasons in terms of the consecutive rise of the Sensex, yes, the economic outlook plays an important role. So when I say the inflation is likely to come under control or the liquidity position is likely to be under control and banks are not going to have problems, these automatically affect the Sensex. Why? Because companies are somewhere related to them. Their profits are automatically related to them and they're trading in the market, and people are looking at all fundamental factors and the technical factors to buy their stocks, besides the other factors. So yes, I believe these inflation or the GDP growth rates which are being proposed and other things play an important role.
We may say, an analyst might deny that our markets are completely unlinked to the world market, but that's not the reality. As we know, all markets are becoming integrated with each other. And as we saw yesterday, shares on the Wall Street were lifted by modest gain on the S&P. Today, the Asian markets have done pretty well. They were also having the same fate like Indian markets. So do you think with all these favorable, gains all around, market will take a cue and open up tomorrow on a better note?
Well, Sanjay, I do agree that, somewhere the markets are now integrated globally. So there is no one market, say, stand isolated and say, I'm functioning on by my own. There are global investors like the FIIs or the others who are actually investing in different markets, which influence their portfolios in terms of changing from one market to another. Now, when we talk about markets being integrated, we also talk about how economically and politically they are interrelated. So if something happens in the US in terms of its, let's say, bad growth rate or current account deficits, they also influence us because there are major trading partners. So, and because these companies are listed in the stock markets, they get influenced in the Sensex. So yes, the markets are completely linked both in terms of the investor profile, in terms of the portfolios, in terms of the currencies, in terms of, let's say, the trades. So all these factors link the markets together. And then there is a psychological factor also. Let's say if other markets are not doing well, our markets will obviously have some fallout through. So all these factors make a difference.
We have seen usually, before the budget, there's always a pre-budget rally, in the stock market, people's expectation about the concessions or taxations. That changes the mood of the market. So far that has not yet started, although government has started a consultation process. Now we will have the economic survey, before the budget. So how do you see the market reacting to the pre-budget rally?
See, when you look at the Sensex when it was falling, not the last 3 consecutive sessions, but when the Sensex was falling, it had a lot of pressure on the government, which brings about the SEBI to bring about this probe of the beer cartel and which relaxes the fallout in the Sensex. So it makes a difference in terms of the budget. Each time when the budget is coming, companies try to put a pressure on the government so that no extra tax is put on them, whether it is banks, whether it is companies. Now we are very well aware that the government has a certain set of revenue generation technique, which is the taxes. Now where do they get the taxes? From the companies and the banks. If the Sensex is not doing well, the companies can obviously reflect that since we are not doing well, there should be not extra taxes put on us. Now, because of that, I believe the Sensex is, somewhere showing a fallout, which the SEBI is today probing in terms of these 25 entities. But I don't think these are the real entities which should be completely pressed upon in terms of their manipulation for how the Sensex is looking like.
But how will this SEBI probe and the budget, how will that affect investors' confidence in the market?
See, 2 things. One, SEBI is a regulator. So once it comes out with a probe or it puts a penalty on a certain company which is doing insider trading or which is doing manipulation or on the stockbrokers or mutual funds, automatically the investor believes that he is protected. And once he feels that he is protected, he is willing to participate in the market. If investors burn their hands, they will pull out their hands from the market, which is not very good for any market. Secondly, when we talk about SEBI's probe, it also helps, like when we have seen that the Sensex was just going down, and the SEBI has brought about the probe. People are cautious. They will just not put in a certain amount of a strategy which will lower down the stocks because they know they're being watched. So automatically there is a self-correction that will take place. I also believe that this entire Sensex, though some companies can manipulate them, but the Sensex is also identified with a lot of other parameters. So it is not only these companies. So we should not much target on them. We should be very careful and we survey them carefully and make a watchdog out of us and not a bloodhound. That's all.
Yeah, sure. SEBI should not play a role of witch hunting in the market. Rather, it should reinforce and educate the investors. And investors should make money out of the market. Thank you very much for your time.
Thank you very much.
You were listening to a dialogue on SEBI probe into suspected foul play in stock market crash. The participants were Dr. Yamini Agarwal, Indian Institute of Finance, and Sanjay Jha, South Asia Editor, Global News, London. It came to you in the program Money Talk, produced and presented by the News Services Division of All India Radio. This program is also available on our website newsonair.nic.in. You may email your opinion about this program at talksensd@air.org.in.